Look, I mean, gold's been a core part of my portfolio and thinking for a long time. And there's been a serious divergence of gold's outperformance versus real rates in the US now for months. And I think really it's the collective wisdom of markets understanding that the gold market is kind of calling BS on the US fiscal situation and long-term ability to pay back its debt.
This short clip is presented by Edge. Edge is our pro-to-pro advisory service, which is all about the macro with a focus on one-to-one engagement with the hedge fund manager, Craig Shapiro, and direct access to LaDuc Trading founder, Samantha LaDuc. For more information about Edge, visit www.laductrading.com/edge.
The other thing that we have is we have a very sizable pull of gold to the east, to China, to India, and this alternative non-dollar commodity trading system that has been established and is accelerating in speed and in size, right? I mean, you basically have BRICS that are trading away from dollars in oil in a large way, and they're settling excess reserves in gold. And so you have China trading with Saudi and UAE and Russia, and you have India trading with both of them as well. And that trade continues to grow, and they are doing it away from dollars, and they are saving excess reserves away from US Treasuries because the US government has decided to expropriate Russia's reserves. And so it is just a risk that and not only they did, but they're talking still about taking that money and giving it to Ukraine. I mean, like, to me, this is, without being too hyperbolic, this is like World War III type stuff. I mean, literally hundreds of billions of dollars that belongs to Russia, that some combination of the US and Germany are just going to take it and give it to Ukraine. Like, I don't even see how that's not
before or after they accept Ukraine into NATO. They just today accepted Sweden, 32nd member.
I don't,
we know.
We don't know, but I'm saying, but that dynamic where you could become a enemy of the state of the US or of the EU and have your reserves expropriated and sanctioned away from you, I think is a risk that increasingly countries are not going to tolerate. Whether it's China or India or Saudi or UAE or anybody. So I think they are setting up this alternative system. People have been saying, well, there's no BRICS currency. It's never going to happen. And that's true. This isn't about a BRICS currency. This is about multilateral trade settling excesses in gold. And so there is a pull to these countries to have more gold because gold buys more goods. And I think that's been kind of the underlying dynamic in gold's outperformance. And then you add on to that the Fed is, been thinking they're going to be cutting rates this year, and inflation, at a point when inflation really is not back down to 2%. So I think, you kind of have all these positives going for gold. Is it overbought now? Maybe, is there risk here because we're into big macro data and maybe see yields move? Sure. But I think this is we're in buy the dip mode. And the other thing that's very interesting is that gold ETF flows into GLD continue to go down, right? There's been no sponsorship of this gold price move in the US retail community. And so if and when the US decides that it needs to take part in gold, watch out. We're going to be continuing to move higher here. And I think this gold continues to move all year.
Yeah, this is China gold reserves, real gold, not GLD paper.
Yeah.
And this chart I wanted to show, which is of continuous contract, if I can bring that in right here. This is dollar yen, obviously, on the daily. We had that big rollover, and this is what we've gotten so far in continuous contract. So it's definitely erupted. There's no question about it. But it took, 3 years for it to get above break even from 2020. And we had a quick shake and bake back here intraday. But this is definitely kind of sticking landing. So very
look, a higher gold price and a higher gold to oil ratio helps China kind of deal with its balance of payments issues and deal with their currency. So, look, I forget who, I think it was Louis Gav who said you can look at the gold price as a determination of kind of who's winning the great power struggle. Is it China or is it the US? And the more that gold goes up, it suggests that China is winning, and the more that gold goes down, it suggests that the US is winning. And look, there's been a view from the Kyle Basses and others of the world that China's going to have this deflationary property bust. They're not going to be able to afford to kind of buy commodities, and they're going to go into some massive depression. And China changed the game because they buy commodities in RMB now. They print RMB to buy oil and commodities.
EVs, exactly.
And they have, unlike the US, who doesn't have the goods anymore, China has the goods to trade, right? They have things that other countries want. And so they are not being affected. They're not going to devalue their currency, I don't believe, in a large way. They're already running massive current account surpluses. If they want to devalue further, I think they could, but I think they want stability in their currency in order to kind of keep the virtuous cycle momentum going of this alternative currency system where nobody in BRICS really does a lot to disrupt the process. And so if everyone kind of keeps a stable-ish type of currency, they could all kind of trade with each other in a pro-cyclical way. So I don't anticipate China's going to have a massive devaluation or revaluation, anytime soon. And so, look, I think what we saw.
The dollar.
What's that?
And this is hitting the dollar.
Yeah, and I think, look, what we saw in the third quarter, I think was very instructive. There was, as oil had been firm and the euro was sliding and yen was sliding and dollar CNH was going higher, so CNH was sliding, you had these countries selling US treasuries in order to slow down the pace of their currencies falling too rapidly. And what wound up happening is that we basically broke the US Treasury market in the third quarter and into October of last year, right? Yields on the 10-year above 5% and 30-year above 5%. We basically broke the Treasury market, so much so that Yellen threw out her rule book and said, we're no longer going to just be looking to issue duration. We're going to issue bills. And then the Fed pivoted, right? I mean, like they basically broke things. So who's in a worse situation? Is the US in a worse situation, or is China in a worse situation? If China can help break the US Treasury market by only selling, it looked like they only sold somewhere between 25 and 50 billion during that period of treasuries. It only took them $50 billion to move US Treasuries by 50 basis points, and that basically broke the US Treasury market and broke the US stock market. I'd argue China might be in a better situation in the great economic power game than the US is. So I think that's something we'll have to keep in mind. But I think gold is in the middle of this whole ordeal, and more countries are settling excess reserves in gold. So I think that trend continues. And the last thing I'd say on Bitcoin,
on gold,
even though you weren't going to ask, but I think Bitcoin is, it's hot. Look, I don't think Bitcoin is actually now. Bitcoin and gold are obviously very correlated. No countries except for El Salvador currently are kind of using Bitcoin and settling in Bitcoin. Is there, given the success of Bitcoin lately and given MicroStrategy success, will more countries or companies think maybe they will? I don't know. But I think what you have now Bitcoin trading as a call on, inflation kind of being a problem in the US for longer. And really, it's the only asset where there's fixed supply. There's no ability to accelerate the supply growth. As a matter of fact, next month or in 2 months, we're going to decrease the supply growth by 50%. So, and now we have institutional buying across the board from Fidelity and BlackRock, who have been kind of sainted into allowing, their trillions of wealth of customers to buy Bitcoin, right? We've there's institutional support now for Bitcoin in the US. And so I think Bitcoin is a buy the dip type of asset that more capital is going to continue to flow into this asset. I know there are skeptics, and I know Jeffrey's a skeptic, and others are skeptics about the long term. What does this actually mean? But I think really it's a call option on central bank and government madness. And based on everything I just based on what I just watched for the last 2 days about the intellectual fortitude of who's running this country and what we're about to watch tonight, I'm concerned. And so I could understand why a person may want to store a small percentage of their wealth in an asset like Bitcoin, where there is immutable supply laws that can't be effed with. And you also have this dynamic abroad where if you're in a country like Egypt, we just saw, right, just devalued their currency by 50% overnight. If you have any wealth in Egyptian pounds, you just got screwed. And if you kept at least a portion of that wealth in Bitcoin, you made out better than anybody else in Egypt. So there is an advantage of that abroad. And if you, God forbid, live in a country that is being attacked, or you are forced to flee because of war, you can leave with all of your wealth in your head with 12 or 24 words memorized. And that is a big advantage to have in this.
You said it well.
This world that we live in. So
yeah, you said Bitcoin is really good for those in need and those in greed.
The full episode is available to Edge paid members. For more information, visit LaDucTrading.com/edge.